Okay, good evening, everybody. Hope everyone's okay. Hope everyone is well. Obviously, hope everyone can hear me okay. Right. Well, I suppose, you delve in too much into crypto, Twitter, or the like, and the war is officially over. It is a bull market, and as the title card potentially suggests, Bitcoin has been born again, and we're going to explore that today. And this isn't a doomsayer, no, everybody's wrong. It's okay. We're going to have a genuine look at both sides of that kind of argument and just try and understand not only where we think the market is, but what we should try and at least do next to mitigate risks from that. So hopefully most of the things we go over, are not going to be so nuanced to just what we're talking about now. So those of you that prefer to get it on the catch up tomorrow or anything like that, it should still all be relevant. Any questions you got, feel free to drop it in the chat. Hey there, sure. And we'll try and answer those as best we can. I'm going to try and keep it short. I know I say that every week, but let's go. All right. So Bitcoin 3-day time frame. We're going to cover the 3-day a little bit today. But the thing that I'm looking at when we zoom this up, when we get this sort of looking a little bit better, I've sort of changed some of the colors of these lines now. I mean, this one at 72,000 used to be green. We had to break above it for some sort of confirmation. We've done that. The next one there was at 79,000. As you can see, with only 5 hours left to go, we have managed to clear above that. Second attempt, but we got there nonetheless. And, the reality of it is, no matter how fast this move has been, we have cleared significant levels of resistance on the way through. And that can only be a good sign. I suppose the question we're going to try and explore is whether or not that good time is going to last for a long time. Now, we haven't really confirmed that we finished this move up. Certainly the 3-day time frame doesn't suggest that that is the case. And obviously the next big crunch point, if you were to do it on the candle close, would be 81,500. Given its significance, I am not considering it from the 3-day time frame, but more from the daily. Let's just round that to 83,000. I'm going to say 8,300. 83,000. That is really, for me, one of the major final confirmations that this is the start of that bullish climb out. I say start, obviously it's happened, but that confirmation that the start has gone ahead. And until we get that next stage in that trend, that higher high from this situation, it is very difficult. I mean, it's easy to get excited, but it's difficult to at least, confirm that that is there. Obviously, other indicators we're going to look at in a minute, which have proven to have sort of sided with the bulls, but it's all about trying to stack levels of information to give you that clearest picture as possible. Hey there, Chris. Hope you're doing good. So things are looking great on this. Now, the one thing that's really caught people out, this chart, weekly chart, monthly chart, whatever, kind of shows it's just the speed at which we've come up there. And much like when we see these big red moves down here and here, they end at the bottom with complete and utter fear because the move happened so fast, people were left out, and there's always that fear of FOMO that you didn't sell on the way down. But interestingly, in this side, because the speed of it going up so quickly, and we haven't seen that throughout the entire bear market, it has been probably, 18 months since we've seen a real move like that over 7 days. And so that has caused a significant amount of, euphoria, but we'd call it greed, with the fear and greed index moving through. And coupled with that, quite a lot of FOMO from people that have been on the sidelines missing out. And that's kind of, in some ways, I think, maybe clouding people's judgment, because you go into Twitter, and I haven't bothered filling the feed up with loads of sort of Twitter posts because they're largely irrelevant, but the sentiment has changed. There's a lot of, dogging, that's not the right word. There's a lot of shit talking. Don't know why dogging came into it. Of people that thought, the 4-year cycle was still a thing, or the fact that they hadn't bought in yet, or they're even saying that this hasn't been confirmed. It's almost like we're shouting mission accomplished, and we may not have quite got there yet, but it's to be expected with such a fierce move. 25% in 7 days, actually less than 7 days, is very impressive, to say the least. So that's sort of Bitcoin, big picture, 3-day time frame. We're going to look, obviously, how that plays out a little bit later on. MicroStrategy, I'm going to start in the middle here. Obviously, replicating that with its move up. This was looking like, a very good purchase point. I'm trying to think what word am I calling, sort of acquisition, I suppose. Stocking up, etc. And then with Bitcoin making that move, obviously, it's gone and done that. It's been a stock we have left the gap over the weekend. Be interesting to see how that filled. We did get a wick down to try and fill it, but there is still a little bit of a gap at 414. We can come back later on to sort of potential areas for pullbacks, etc. But it's a very good chance that that gap will be filled. Doesn't necessarily mean that the roles have reversed there. But again, a strong move up, now moving into sort of this area of noise. And, you know, whether or not it moves sideways or shoots straight up, obviously will depend on what Bitcoin does. Neither is necessarily bad. Obviously, what we want to see at some stage is a pullback to some level of support. I mean, hell, if it came down here, I know people feel like it's the end of the world, but managed to make support there and climb up through, that'd look perfectly healthy, in my opinion there. Moving on to BitTensor, and then we'll get on to the NASDAQ. So BitTensor's had that strong move as well. Great to see. Bit of a weird one in terms of a couple of days ago, it wicked up, and then like 5 minutes later, came back down. So we saw that move up to 250 before it went all the way back down to like nearly 212, 213. And then actually over the last couple of days with this final green candle here, we can kind of see it's been stabilizing a little bit more. Still a fairly decent candle, although there are wicks both north and south of that one, showing that there's at least some indecision. But what I do like is that the move's already come back down. I'm gonna have to zoom in now, and you can see that we have, once I get rid of that and this, we have come back down to that 213 level, which I talked about so often, made that sort of like test on that, and then we've started to move back up. So again, still looking good. I've extended these lines out here, which we used, God knows how long, all the way through 2025, just to see where they are. It does make an interesting point at the moment around about 270, which interestingly enough is actually the level it needs to get to make at least a local higher high, and then we can start moving there. So we know that BitTensor has some room to run before it can finally prove itself, but that's just generally because it just hasn't done as well as Bitcoin over the last few years. But the one fly in the ointment is still the NASDAQ, and it has had a positive day today, so don't get me wrong. But whilst Bitcoin has been moving, the other traditional markets have been doing the exact opposite, really, and actually been moving down, potentially just for an area of consolidation before that next leg up. We know that crypto is a lot more reactive. Sorry, I've got something in my eye. To sort of, global economic news, etc. So that could well be it. But the fact is, this has pulled down. Crypto has moved up, which kind of is a bit of a strange one in terms of we have a look at some of the news that has come out with, massive concerns about the bond market in the United States at the moment, particularly the 30-year, which was at one stage 5.3%, which is higher than what it was 2006 to 2008. Obviously, we had that announcement beginning of last week about sort of buybacks and doubling that, potentially more. There was rumors that Besant was going to talk on Monday this week about extending that. He actually categorically denied it, and it was more talk about sanctions on Iran. But what you will see from that, and sorry to just delve into this, is yes, we've had that pullback, and it's looking quite good. We just need this to follow on through, provide that confidence in the market. That they are doing something here, and I don't necessarily want to get into the fact that is this QE, is it money printed? It's not necessarily QE, it's just a way of them doing that. So anyway, I'm sorry, I just got a note from Siam, not us, the RT community. Anyway, it's about Subnet 27. I'll read it another time. So yeah, don't know why I got sidetracked on that. Let's just move away. So let's get on to this chart here. So I do have the leads game on in the background. It is muted, don't worry. What we can see, Bitcoin 12-hour time frame, we really get to see the scale of the move up. So we took through, these are grey now, greyed out for a reason. Liquidity gone, liquidity gone, liquidity gone. And this recent move this morning finally cleared the remainder of this box. I suppose technically it actually happened last night, and we've had that strong move all the way through. We've had a day's worth of pullback, and then generally it's just been green all the way. So we can see the distance from some of these EMAs. I know we don't have them all. We are starting to fan out. We have cleared through that fib level there. The next one really is that 1.272, which is getting pretty close to that new, higher high. I was going to say local. It was sort of 6 months ago or 4 months ago. So that new local higher high kind of territory. So certainly interesting in and around there. But just from the fib point of view, 74,000, a good level to fall back to for some sort of consolidation, all-time high associated with March of 2024, associated with the ETFs, etc. certainly something to look at. Now, I didn't bother drawing on here the new liquidity zones because they're incredibly fresh. But if we actually just go on to CoinX, so this is sort of the chart that I usually use, monthly time frame. You can kind of see it down here. And look, we had these big zones that we just sort of ripped through all the way, just clearing it up, taking all of that out in that move there. And there's just sort of nothing that was behind. That's how fast this move kind of went. I'm not necessarily interested in what happened in the past. We're going to talk about that later. But just having a look at what is forming right now, because it's on the monthly, these don't particularly look very big. But just look at this cluster of liquidations between 74,000 and sort of 76,000, already starting to build on the monthly. And these, each individual line, 250, 293, I just saw that, 286, 245, 332 million. It's a huge amount of longs being placed. So there's some liquidated areas around that 74,000 level we just talked about, which could certainly be interesting for market makers. And if we just want to zoom in on the 3-day time frame, you really do get a bit of a picture with these hotspots of where they are. Now, they actually, there is a cluster now also at 77, 78,000 just coming in, but it's at 76 all the way down to 74. It's still there. Sorry, now I've got an itch. Everything's going off. So certainly something to look for. And we're going to talk about what we should expect with Bitcoin's price, momentarily. But I do want to, so here we are. Taking out of those 3 zones there, that was at $3.3 billion worth of short liquidations. And it is something that we just need to remind ourselves just on that. And now, obviously, the short liquidations didn't cause the initial move upwards for Bitcoin's price. But let's not get it twisted. Short liquidations have have definitely accelerated the Bitcoin rally that we've seen, given the absolute size of those. So, and as we understand, well, I don't know if you do understand, but if you have a short on Bitcoin and it gets liquidated, that effectively is the exchange buying Bitcoin at that level. And so we get that cascading effect where shorts are getting liquidated, and it looks like we are getting new buys, sort of creating that sort of demand, I suppose, or filling that demand, driving that price up still. And it happened all the way back in October 10th or whenever it was with the fall from the top, and we had this massive cascading event that happened on I think it was the 10th of October, and that was done through longs being liquidated, effectively being sold. And as price was moving down, there was just no buyers in there because we were getting loads of extra sells being placed because of the liquidating events, and that just caused the price to go from that 126 all the way down to 101,000 before bouncing back up. And it, as devastating as that was there, it's a very similar story to what's gone and happened here. Now, I'm not saying that because that happens we have to have a reversal, but the sheer fact of the amount, this was the largest liquidation event in Bitcoin's history, and so that has accelerated that pump up, that 25%. So certainly helping in that direction. My kids have just come home as well. So let's have a look at just where things stand, bigger picture, weekly time frame, and what we need to do. So we got the 200 simple moving average along the bottom here. I'm not necessarily saying I was calling like that, but a lot of people have been saying, look, this is what we needed to hold support. That certainly isn't true for what happened in 2022, but it quite clearly, I know we've dipped below it a little bit, but we managed to hold that support. I'll zoom in for those of you that are on smaller screens. Hold that support throughout that sort of like it's probably about 2 to 4 month period. And then we had that huge move up, and this is what I'm interested in, the green line here. This is the 50 EMA weekly time frame. Obviously, one of my absolute bread and butters. Are we in a bull market? Are we in a bear market? Forget today's candle, forget this candle here, because there's still nearly 6 days or 5 days for this to go. But we did actually manage to close above it. And that is an alarm, not an alarm bell, but that is a warning sign just to maybe, start thinking about where things can go. And the reality of it is, whether or not you want to be a bear, whether or not you still want to believe in the 4-year cycle, let's not just negate evidence that's been pointing towards us just because it doesn't fit with a narrative that we've held on for the last 10 months. And this has closed above it. Now, we could see this fall through this week and just think, it wicked through, it doesn't necessarily count. So I do always say, give yourselves a couple of weeks. We tried that this time and we had to wait 5 weeks to get back. That might well be the case in this, just to see how that sort of plays out. But ultimately, here we are. So massive tick box number one, 50 EMA weekly time frame has been closed above. That in itself is historic to say we are in a bull market. What is next is obviously, can we now clear this excuse me, local high just there? And if we can get above that 82,200, or if you move it up to the wick, 83,000, whatever level you want to call it, then excuse me, then we've got to really be asking ourselves, why can this not be the bullish climb out of the bear market bottom? And I think you really are running out of excuses if you just are still saying, no, this could fall back. Now, I am going to explain what may happen from that, so don't think it's the other way around. But the reality of it is we are 50% away from our two biggest check marks to confirm that this has happened. And so if we do get that second and we do get that close above 83,000, we need to be thinking about what we can do. And again, we'll discuss that a little bit later on, but the evidence doesn't necessarily just end there. If we have a look at sort of what's been going on weekly time frame, again, Bitcoin, but we've got the RSI down at the bottom. So we've got these circles here where Bitcoin ends into the oversold territory on the way down to find its bottom. We had it in 2022. We've also gone and had it up in 2026 here. And interestingly enough, although I haven't bothered to measure it out, the gap between that bottom and then another bottom is relatively similar. But what is interesting is the bullish divergence that has gone and created. So if you think about it, we have price moving down over this time period, but from the RSI's point of view, the RSI is moving up. And so we've had two, similar, symmetrical, I don't know what word you want to use, situations have played out at the RSI there. We have had that bullish divergence. Now, Harry, this has been on the cards for months. Why didn't you point it out? Because the reality of it was, as this was coming, we didn't actually know when it was going to break, and bear markets inevitably have to turn at some stage. We've been talking about the fact that this 4-year cycle was coming to an end anyway. We're only 5 and a bit weeks away from the end of the 4-year cycle, although if you go on Twitter now, it is already dead. And so that's not what we were waiting for. What we were waiting for is the next move, this strong move above the 50 level on the weekly time frame for the RSI. We had that last week, that break above it. And as I said, historically, that has been a good indicator that we are climbing out of the bear market bottom. So there are a lot of similarities with 2022, bullish divergence, retesting the oversold, and then that powerful move through the 50% level into the more overbought territory of neutrality, if you will. But it doesn't necessarily just stop there. If we have a look at it from the monthly time frame, again, it is the RSI, but just sort of trying to re-emphasize that point. So what we got on the bottom, hopefully my head's not in the way of everything, we've got the RSI monthly time frame, and it's not down in oversold. I mean, it's hard to get into oversold on the monthly time frame, as I'm sure you can imagine, but there is a line of support down here, which sort of signifies every bottom on the way down. And the reality of it is we had gone and hit this earlier on this year, 1st of June, with that move down to sort of 60,000 that first time. Not the first time, that was February, the second time, not the 57,000, the 59 it got to, I think, or something like that. And we've had that powerful move, but that in itself isn't enough. It's then the move that happens from that. So again, let me just make it a different color and also, a little bit thicker. So we've got, if you can see, this yellow midpoint line here. So once this, I'm going to have to just blow this up bigger. Once the RSI moves through that level, all 4 occasions through that level, tying in, now I'll just get rid of the RSI, or at least minimize it. And this, again, might be hard to see, but hopefully you can. This is the bull market support band. So it's the 20 and the 20 super moving average and the 21 EMA, exponential moving average, sort of tying up whichever bull or bear market support band. Obviously, bull market support band being if it is above those. And again, at those bottoms, at those levels on the monthly, following a bounce from the white line here, that trend line base of the RSI, it's one solid green candle that manages to break through it. one solid green candle that manages to break through it, one solid green candle that manages to break through it. And guess what just happened this month? With 6 days to go, I accept one solid green candle breaking through it. So if this can hold for another 6 days, we've got another piece of evidence that's saying, actually, we shouldn't really be expecting price to fall. Anything can happen in crypto. Absolutely anything can happen in any market, but we shouldn't be expecting that to happen. And if you are still significantly on the sidelines in 6 days time with price, above the bull market support line, with price in the vicinity or above that 83,000 level, you've got to really be questioning, certainly if price above the 50 EMA on the weekly time frame, why you are so convinced that that is going to be the case. And then, we have one of the largest weekly inflows of ETF money, well, certainly this year, but in the history of Bitcoin. I can't remember, it's like 1.9 billion. I can't do the maths to add it all up. Let's just try 6, 12, 7. Actually, it's probably over 2 billion in a single week. So again, an incredible amount of institutional investment in there. Whether or not that's FOMO doesn't necessarily matter. The investors that invest in the IBIT ETF may well be FOMOing in, may well be trying to capitalize on Bitcoin's sudden move. But we can see with these green lines here, and I'm sorry I can't get this to open up onto the full screen, but we can see here 606 million net inflow last week, and then we've obviously got 300 million there. Those prices don't seem to add up to what we have on the other tracker. But even if you just look at the spikes, we've got this one here, which is the third highest one since the top of the bull market back in 2025. So again, definite renewed interest within there. But it's not just Bitcoin that has seen that. The rest of the altcoin market has also seen that move too. So Total 2, probably propped up by Ethereum's strong move, has also cleared the 50 EMA on the weekly time frame. This is Total 1, isn't it? Yeah, it is. So Total 1. This is Total 2, which is above it. Total 3 just below it, actually. So not quite managed to clear it just yet. And looking maybe potentially like a rejection from there, and it's still got a bit of work to do to clear that high. So it's not quite as close, but we know altcoins haven't necessarily done as well as others. If we look at ETH BTC, so ETH is starting to rally up, which again is sort of evident with the strength of the move that it had prior to Bitcoin moving. But Bitcoin is trying to catch up, hence why we got this red bar forming right now. So there's that there. And again, we do take that look at the fear and greed index, we can actually see very clearly now the sentiment, we talked about this on Friday, has significantly changed. We're back at 74. Matter of fact, we're one away from extreme greed. Now, whether or not you think that is, an alarm bell, the reality of it is that the market has woken up. The market is excited, and whether it's through seller exhaustion or whatever, there is certainly renewed interest in the purchasing of cryptocurrency. And I should have shown you on this one here, because just look at USDT dominance. We were at 9.2 towards the end of June. We had this huge drop from 8.5 down to sub 7 last week with this strong move, breaking below the 50 EMA on the weekly time frame. Obviously, for USDT dominance, we want that to fall. That is signifying that there is renewed interest in purchasing within the crypto space, and that is certainly playing out now. Can we get it down as low as 6 as this continues? That's certainly going to help, but we've obviously we've taken out this. Well, we've got 5 days left, so maybe not, but we have pretty much cleared this. We are below the 50 EMA, so double tick there. Can we now get down to here and really push that through? We'll have to wait and see. However, and I think sharp intake of breath, quick swig of water. The one thing that I think crypto enthusiasts, influencers, whatever, they're very quick to see the good, or at least jump on the good, and not so quick to let go of the bad. And the reality of it is, we have not cleared this line yet. Okay, we haven't. And yes, I would like us to clear this line, absolutely. But the fact of the matter is we haven't managed to do that. And so without that being cleared, we haven't got that final confirmation. And what is to say that we don't just find it falling away and then we come back down? And even if we were to come back down to sort of some of these levels, what do you think the sentiment's going to be like on that way back down, even if it is a perfectly healthy pullback to 70,000, 65,000, whatever, before making that move? And so until we have cleared this, I don't think we can really say it is mission impossible. Even once we clear it, although we might be 90% of the way there, we can never truly rule it out. But the fact that such an important thing is glaring us in the face, I don't think there's anything we can really do. We have been higher than this on the bull market. Now, this one here, that's 83,000. In fact, can we see it? When was that? 4th of May. Let's put it on the 1 year. So the 4th of May is here. The fear and greed index was only at, what was it, 40 and then 50 on the 4th, between the 4th and the 5th. Okay, so let's just say 50. We'll round it up for the sake of it. We were higher, but we weren't as enthusiastic as we are now. And that's because this felt like a strong rally. This really did feel like a strong rally. 1, 2, 3, 4, 5, 6. 6 green weeks in a row, taking us from 63,000 all the way up to 83,000, 25% increase over that period. But we still managed to fall and turn around there. This has got more enthusiasm and euphoria around it because it happened in one candle. If this had just happened in space of 6 candles to get us here, yes, we'd all be excited, but the chances are the fear and greed wouldn't quite be that high. And so, yes, I can understand why people are excited. I can understand why people are, maybe not running their mouths. I don't think that's necessarily the case. But we really do need to wait for that final piece of confirmation. And without it, we fall now, let's just play a bit of, pretend. Let's just say we do fall now, whatever, and we come back down, wherever. We look back in July of 2027, where I've drawn this squiggle from, and we'll just say that this was obvious because we failed to clear that all-time high. It was obvious we were going to reject, and then that fall down would be brutal, etc. And naturally it went as it goes. So we've got to just be a bit, I don't want to say patient, but to taper our enthusiasm for the right, confirmation. And I saw this today. So I was watching a video from Camel Finance, and he himself had seen it from someone on Twitter, but I couldn't be bothered to go back and watch it to find out who it was on Twitter. Apologies. But if you want to watch it happen firsthand, then just go and watch that video there. But it's quite interesting, the story that was being put out here. Now, I've done it the wrong way around, so forgive me. So on the left-hand side, we've got the current bear market, and on the right-hand side, we have got the 2022 bear market. And there's some amazing similarities here. I do need to throw out one final caveat, and that is that the 2026 bear market that you're looking at here is actually on the 3-day time frame, whereas the 2022 bear market is on the 1-day time frame. And what does that really mean? What it means is, whilst we can already see that these patterns are similar, it is actually taking longer for this to play out on the bear market than it did, in this bear market than it did in the last bear market. But now that you've got those caveats, and maybe it's a stretch, it doesn't matter, it's just to illustrate my next point. Let's just have a look. So the patterns are remarkably similar in terms of we had an all-time high that was made earlier in the cycle, which then sold off quite significantly before a very strong, sharp rally up into some form of, I should be marking that, into some form of sort of double top pattern before the bull market was confirmed to be over, and we saw significant selling off before we had a period of stability where price tried to rise but ultimately ended in failure, and then we see that next major fall down with sort of a double bottom forming. And that's kind of where we are now, and price then rallies through and we get to where this is here. Now, interestingly, what we see here in the 2022 bear market, let me get rid of my yellow squiggles. So we're in the 2022 bear market, is we actually do see the Bitcoin's price clears this. So similar circumstance to where we find ourselves at the moment. And they actually managed to clear that local high. Any guesses for what happened after that? That's right. It cleared that local high, but actually it wasn't the end of the bull market. We came back. Oops, no, we didn't. We came back down into this range here, which is kind of what we ended up forming, was just another bearish rising channel, I suppose. And then it ultimately ended up losing the bottom there, and then we had another go at that, and then we did find our bottom eventually all the way down here. Now, I'm not saying that necessarily is how things are going to play out, but just bear in mind that that could quite simply do exactly the same here. Now, if that were to be the case, and this figure is totally arbitrary, isn't it? Don't necessarily, but this could actually play out, and this is the point I was, I suppose, making a little bit earlier. Even if we do get above the local high of 83,000, it's not 100% guarantee that we've had an ending to the bear market. Ultimately, actually, what we could see is very much like this: that fake breakout, the sort of I don't know, the euphoria that brings before the final long strong push down. Now, again, this was on the right hand side. What I've done is I've basically taken that chart from the right hand side, which is daily, and then it's just put the candles on the 3 day. So this is actually making it out like the bottom would be end of February 2027. It isn't, or it wouldn't. We don't know. It doesn't necessarily matter for the point that we're trying to make here. The point just being that we can still quite clearly have a pullback and a fall away there. And I know people don't want to talk about the 4-year cycle anymore, but just remember, with that 4-year cycle, do I have a clean chart anywhere? I suppose this one is clean enough. With that 4-year cycle, the bear market bottom is found on that date or near that date, and prior to that we have rallies up. We do have those rallies that move that way. I'm just trying to see how much this rally was from here to here. That was a 40% rally. From here to here, 40% rally. So last cycle we had that 40% rally before eventually we fell apart, and then we ended up falling another 40% down, which another 40% down from here would take us that sort of 50,000 kind of level. The point just being that we have seen that before in exactly the same circumstances. July 2022, we were talking about the confirmation of Ethereum had agreed it was going to move from proof of work to proof of stake. It started rallying first, then Bitcoin took over. Everything pumped off the back of that. We had a good summer, and then guess what happens? It fell away. Well, Ether started to rally first this time. We've had a good, it is a summer, I suppose, still. Bitcoin's caught up, and then everything started to rally as well. We just don't know how this story is ending yet. And yes, there's going to be plenty of us out there that are siding with the bull side. So all we need is that final confirmation we can make that move. But as I say, there's still an argument on the table that even should we break that, there is still a path for this to go back down. What would the market makers love more? Can you imagine the long liquidations that they've got at their fingertips now after this move up? Now, we could say, well, that would be the same back in, January of 2023 when we rallied out of the bottom there with that strong impulse move. It'd be exactly the same as April 19 when we rallied out of there, that strong impulse move. The long liquidations behind it. I get it. I absolutely get it. But there is still that threat there. And as long as that threat is the thing, then we can't necessarily rule it out. That's that. And then I will just take you back to this chart here, because everyone's going on about ETFs. Everyone's going on about the fact that, look, the inflows, the net inflows have been fantastic this week. Third best in the year. That's good. But I don't know if you can see this. Hopefully you can. Obviously, we got the red, and we got the red is the net outflows, and the orange is Bitcoin price. Just look at every single major peak. What happens next? So we got this one here, 10th of October, 1st of October. That's the highest individual one. What happened next? Price fell away. Next major move. What happened next? Price fell away. Next major move. What happened next? Price fell away. Look at this one here. Price has rallied up to it. We've got to that significant level. What's happening? So why is that? Is that because the institutions are dumb? No, of course it's not. They're buying. Although this is a representation, it's orange line of the price, that candle there is probably them significantly buying at 67 or 68,000. Everyone else is moving up from that one there, and the price drives up because of increased demand. And this is just a reflection of not just institutional demand that you can see with the green, but retails as well. And then this isn't look, ETF then going to lose money the next day. No, of course they don't. They just sell. They've made their move. They're market makers too. They've made their moves on the way up. So strong buying weeks like this in the past have typically sold off. Again, we go back to January of 25, selling off as well after these large intakes. There is an abnormality when Trump won the election. These massive moves up and price came up. So I accept that it's not guaranteed every single time, but we can certainly see within the bear market structure every single week that we have seen a major increase in net inflows. The following week, the market has gone and corrected. So just something to bear in mind, take it with a pinch of salt, I suppose there. Right, fair enough, right? There's two sides of the argument. Trust me, there are hundreds of more ways that we could outline either side of that argument. The point is, what do we do now? Let's just say we're accepting that 57,000 was the bottom, and actually this is the climb out. What do you do now if you are significantly in cash? What is the best way that you can manage that? Let me just tell you without dragging it out. What is not the way to do is to now YOLO in, okay? It's not to take 100% of your capital and go, I'm buying now. That is not the way to do it. No shrewd, sound-minded investor would think that's the best way to tackle this, because we have fear and greed. We have greed, sorry, at not historic, but certainly, yearly highs, right? That's normally a warning sign. We haven't looked at it yet, but we will do. Bitcoin on the RSI still in the 80s on the daily time frame. Very overbought. Something to consider there. So how can we actually manage it? Well, the reality of it is we accept that Bitcoin has broken through. Okay? That's the first thing. You got to let that go. But it doesn't now mean that we'll never see price below 78,000. What do we typically expect happens when we look at this sort of market structure? We have a breakout, we make a high, then we make a low, another high, which is a higher high, then a higher low, and up we go. That's sort of the path, isn't it? And of course, that doesn't look right because we've just had one straight green candle. But the reality of it is what we're expecting at some stage. Get a bit closer. Let's get rid of this now. We are expecting some form of a pullback, and we can have a look at levels in a second. But the reality of it is we expect price to make that higher high. Then we're going to come back down, make that higher low, because this is our current low. So we need that to convert, to start the confirmation of the trend. Then we make that next higher high, next higher low, and then off we go, isn't it? Now, typically, if I was to draw that a little bit neater, let's just try. What I would perhaps sort of say would be a good, make this move, doesn't matter where, to there, come back down to this level, new high, then come back down to say that the previous high, like here, and then make that move up. Oops, I've got to double click it, but you get the point. That's what we're looking at. So how does that help with what we want to do? Well, we should be anticipating at some stage a pullback. Now, let me just reiterate this again. We need to break the previous high. Okay, for this to be a thing, we are assuming that price will now break 83,000. If it doesn't, then what I'm about to say doesn't necessarily matter. But just bear that in mind, okay? 83,000 has, in our example here, been broken. Then we are looking for a low. And that we don't know what that low is. But the reality of it is, dollar cost averaging is your friend after this, okay? What we want to do is we want to wait to see how price comes down. And then we're either buying on that way down, because we don't know when it's going to be, we don't know what's going to turn around, or we can set ourselves some limits of where we want to buy, and we can ladder in however you want to ultimately doing it. But we're buying in on the pullback, okay? Then we see price move, Once we know that price then goes through the level that it previously climbed to, good. Okay, we can stop the buying for a moment, allow price to continue to rise, wait for it to come back down, buying again as price comes back down. Once it's gone back through that price there, we stop, we wait. You can either rinse and repeat till you've got fully back in, or you can, change your amount of proportions on basically how well you want to do it. But what I would say, I go back to my arrows. So we do nothing here because we're waiting for the top to come in. There it is. We buy here. Hopefully we get there. This should be your biggest bit of buying. Once this has happened, once we've got that confirmation that the higher low is in as well, and we're starting to go back up, this is where the chunk of your buying needs to be, even on the way back up as well. Because if we're right, this is the lowest point we're going to see, because then we'll break through that previous level. We've got maybe a bit more chance to buy, but I'd probably wait for that to pull back. You can buy some down here again, a little bit going back up. But once we break through that level again, you wait. But I'd say this chunk here, this is your first bite of the cherry. And if we're right, this is the lowest point it's gonna get to. So it doesn't always work out. If trading was that simple, we wouldn't have to even think about it. It'd just be rote. But that's generally a good rule of thumb for how to do it. So let's just get rid of all those. So what else can we do? Well, I mean, I'm sort of thinking right now, let's just assume we break the all-time high. I need to assume where not the all-time high, sorry. I need to assume where the higher high is going to be. So let's just say it's ever so slightly above its current 160,000. We can have a look at sort of a fib and just say, right, well, we'll go from the bottom to where we are. And this is just our retracement zone, isn't it? So we can say, right, well, where do we think retracement can come back down to? There's 72,500. That ties in quite nicely with that there. There's a bit of noise here, and a bit of noise here, and a bit of noise here. That makes sense. Maybe we got the 0.5, 50% pullback. Well, 50% pullbacks are quite common, actually. So, again, you could set it at just below 70,000, 69,000 as another good level for where this could come back. 618, golden ratio. Well, 66,000. Not only is it the golden ratio, not only is it the top of all of this noise here, but it's also the base of all of this noise here. That could actually be a very good level. Now, I tell you, price comes down to 66,000. We lose 70, people are going to start stressing. We lose 69, people are going to start stressing. We get down to 66,000, people are going to be really crapping the bed. But we could just so healthily turn around there and then continue that way. And then again, with hindsight, we'd be like, well, that was a great move. So it is very much about sort of waiting and understanding. I'd say it's hard to do it on that first move down because we don't know if it's a rejection. But if we have cleared this high here, then, the odds are stacking in our favor. So, I forgive you if you don't want to buy on this leg because you think it might be a fake breakout above that high and the price is going down. And then you just go, right, well, I accept that. But I know that prices, because we're going to retrace, is going to be lower than what it is right now. So I wait for the bottom to come in and I just buy on the way up instead. Absolutely fine. Totally acceptable as well. So certainly a couple of ways just to have a look at it. There's other ways that we could have a look. We could have a look at EMAs. We could have a look at vector candles. We could have a look at the RSI. We cook have a look at MACDs. We could have a look at crossovers, stochastics, whatever you want to do. That was just one example. I'm sure we can talk about more in chat a little bit afterwards. Right. Let's have a look very quickly then, Bitcoin, on just typical kind of charts that we use. And the first thing that I have been watching has been, this bearish divergence on the RSI. And it was inevitable it was going to happen. We have the last couple of months talked about the RSI a lot. And some people think it's too simplistic an indicator to use. Well, that's fair enough. But the reality of it is, you go back through history, we talked about this on Friday quite a bit. You get to the levels that we're at right now. The next move is a move not just back into neutral zone, but actually all the way down to oversold. And I have to say it every time, just because we go from overbought to oversold, whatever that percentage move is, doesn't necessarily need to equate to that in price. But we are expecting some sort of pullback. All the things that I've talked about just then, in terms of fearing fear and greed and divergences and all this kind of stuff, the speed at which that went up, we are expecting at some stage some form of a pullback, even if this is confirmation of the bottom. But the reality of it is there is a bearish divergence falling now, which is giving us an indicator, if not a time, that actually we are going to see some sort of reset with the price. And, you know, as we can see, Friday the 21st, we made our high on the daily of 86, but the price closed then at 78,000. Since then, okay, price has only closed at 79, but we have peaked as high as 81,000, with the RSI dropping over that period down to 80. So that is the bearish formation forming. Now, where could price go? Even from the vectors, it's tough because this is just such a clean chunk of vectorage, if you will. The midway point is 71,500, tying in with a 200 moving average there. Sorry, that's the 200. This purple one's the 800, which note is price is currently above. So that could certainly be a pullback zone, but we're so far away from the 10 and the 20, even the 10's 73,000. So that's nearly a 10% drop. The 20's at 70,000, that is over a 10% drop. And the 50 EMA is nearly a 20% drop. So we'll be giving back quite a lot of our gains there. That's just looking at it from a daily point of view, solely with the EMAs, but we know there is trapped liquidity in this zone. We also know there's a shed ton of, what have I done? All I wanted to do was use my pen. Of liquidity down there for people to go at. So there's certainly meat for that to come through, to take out, without it being necessarily a break of market structure. So that's why we need to keep. Now, forgetting that, matter of fact, we'll get rid of the RSI. Talked about it more than enough now. I'm going to try and take some of these other ones off. Don't necessarily need them right now. Because, yes, okay, we haven't cleared this bit of noise back from May, which everyone is harking on about as an indicator. And trust me, I've said it enough times myself. There's also one other thing that's in our way at the moment. And it's this yellow line here. Now, this is a 50 moving average, but it's a simple moving average. And you might be saying, well, Harry, you never use the simple moving average. You're an EMA kind of guy. And of course I am. But I am also, and I wouldn't say clutching at straws, but I'm also just trying to make sure that I'm not getting lost within it. And the simple moving average on the way up works incredibly well. And on the way down, we have stayed below it. Now, interestingly enough, bearing in mind we're running out of steam in the buying at the moment, bearing in mind that the RSI is still hot, bearing in mind that this price has actually come up and hit and rejected straight off that, which was also below that 82,900. So I think that's a point to look at the moment, just over 81,000. If we can't make it through that, I would argue that it's a 200, it's a 50 simple moving average that has held us back. And maybe for those of you that want to use simple moving averages more than you want to use EMAs, then that criteria hasn't met yet. Now we throw on the 50, you can see how close they are, but they aren't actually together. So that's certainly something to consider there. Now, moving away from the daily, let's just throw some of these back on, down onto the 4 hour. Should have kept the RSI actually. Me and my big mouth getting rid of it. But what is interesting with the 4 hour is after that first initial strong move, fairly mundane candle movement through that there. And so, we're starting to see price stabilizing, catching up with some of the EMA, still a fair distance between some of these other ones. But the 10 and the 20 pretty much being respected. And we know 10 and the 20, it likes to stick to those. So we can hug onto these and keep on climbing far longer than we can, wish for it to happen. I will throw the RSI because I'm fairly certain. Probably still, we're still seeing a fairly strong bearish divergence. And bear in mind, this was 95. There was only one other time in history that price got to that level. Yes, okay, we're cooling off, we're down at 63, but price is continuing to climb. We should see that break. I just can't tell you when it's going to be, but that break on the 4 hour, I would suggest, is at least 74,000, tying in with a couple of those liquidity zones, but there's also that nice chunk of vector just at 70,000. Then we're throwing in that EMA conversation with 382 down at 69,000. So what was it? The 0.5, it might be the 0.5 actually. So yeah, certainly that to just sort of consider where we're at in terms of, whilst we're up here. For me, all eyes are still on that 83,000. We get above that, we get some stability. We know we got some vector candles we can get through. These are quite old vector candles as well. We're talking January and beyond or before for these. 1 hour, similar kind of story, very drawn out bearish divergence, but it is technically still there. This is coming back and hitting the 50 EMA quite nicely, resetting it. So if you're wondering why it's being able to sustain itself like this, even if it feels like it's tiring, it's because it's buying its time down on the 50 EMA 1 hour time frame. So not looking too bad there. Okay, I'm going to quickly touch on BitSensor and try and touch a couple of others, and then we'll go from there. So BitSensor, let's get rid of the RSI. I'm not fussed about the RSI with BitSensor. So broke through the 50 EMA, green vector candle, nice strong moves up, sort of 4 candles. This weird one which turned into a red vector candle, just ended up down on the day. But since then, the price has kind of recovered itself. But interestingly, we are, I don't want to say struggling, but we're having that fight now in and around the 200 EMA. And much like what I've said in previous times, BitSensor does like to make these moves up. It's just whether or not it can continue to do it. Now, we're slowing down, and obviously today's a down day. We're going to need a couple more days just to confirm it. But if this just now suddenly, prints a couple of those, and that's it, we would not be surprised with what we've seen in the past. Strong move up, and then just gives all those gains away. Plenty of room for it to run into on the way down, and it can do it like it does every other time, which is just on no volume whatsoever, or no unnecessary volume on that way. So we've got that move that's had there from the daily. Now, what can we do? Because we haven't actually really lost the 200 yet. And you could argue today, tomorrow, we just sort of keep fighting above that, build from that strength there. And then obviously it's that next move. Now, what's interesting with that next move is the 800 EMA, the Gandalf line, now below. Remember, it was 315 for ages. Now it's below 280, which is where this wick was from this previous high, although we're body closers around about 270. So depending on how long it's going to take for us to get to that position there, but there's certainly legs and rooms for it to get to. We break above that, I think we can start to have a bit of a conversation of a party. But until we do, I'm not really there. And for those of you that are in BitSensor, probably most of you have been holding it. And so this move up, as welcome as it is not necessarily gaining you profit. It is just eating away from the deficit you had. But still positive to see where that's going. And we shall wait and see. I will just say altcoins, in my opinion, totally being dictated by Bitcoin. So that might not last as long as people would like to see. I'm not going to bother going too much on any of the others, just because in other time frames, that is. I mean, here, is it really going to be the end of the world to get us down to that 850 EMA, taking out this vector candle, but still finding support above 220? No. As long as we can stay above that 213 level, that wasn't a very good line, this sort of level here, then I think, check, that's a positive thing. Ideally, we stay above this 218. We come down, we just stay above there, and we have exactly the same conversation that I just had on Bitcoin. Ignore this. I don't know what happened. It was in and out within seconds. Well, not seconds, but minutes. So that'd be a high. That'd be a high. Oh, that's so messy, Harry. Low, well, high, low, high, wherever that is, low, as long as it stays above that one, and then we look to build from there. All right, let's have a look at Ethereum. Ethereum obviously made that nice strong move, 2,500. Now, this led Bitcoin. I've not looked at this chart until just this second. It's on the 4-hour time frame. This led Bitcoin, and I wonder if it's given us an indication at the moment, because we've obviously had that move there. It's on the 4-hour. How does that look on the daily? Okay, I thought it was going to be like some sort of stopping vector candle. No, it's not. But interestingly, it runs into some noise at the 800 EMA, and it's starting to stall. And as we get down to the 4-hour, you can kind of see a potential double top. Oops. Sort of forming here. The question is, does it come down there? Now, I wish I had a picture of Bart Simpson, but there's almost a Batman / Bart Simpson potentially forming here. Now, for that to form, we actually do need to see I mean, this could still go sideways to give us a real bust. A strong move down for that. But what's to say when that move doesn't come down that we don't, give away 20% and we end up sort of coming back down to this sort of 220 level, maybe beyond. I don't think it's out the realm of possibility. What I would like to see, just because this one is forming potential topping pattern ahead of what Bitcoin's doing, is it turning around here, finding that support, not losing the 20, sort of 240, 2,400, let's call it, managing to find some support there and making it. We need it to close above 2,500. So it's only $50 away from it, but we've got to put that work in now to, provide the confidence that we aren't running out of steam, even if potentially we are. Now, hype obviously got mentioned by Trump, so that's on a bit of a push up itself, all-time highs, 81, looking very nice, strong move there. Link got mentioned as well, but that started, it had the Trump mention, and then it sort of, wandered off, but still looking good. Let's start flicking through some of these on the daily. All of them are going to now be above 50 EMA, looking strong. BNB, Doges. I mean, this is, actually Doge running clean into its 200 EMA and finding some sort of rejection there. And it's interesting, maybe some of these alts have actually run their course into some major EMAs, and that's why Total 3 is not looking as good as Total 2 or Total 1, because we're just not getting everything else carrying it. Obviously, Hype's its own beast. No, moved up away, but still staying above the 50 EMA for Casper, so room to go, but didn't get anywhere near its 200. We talked about that. Near, fine. Ondo, Pippin, it's done. Got rid of it. SPX has had that strong move. This channel that we sort of, bearish channel we've been in, we've just come back up to it at the moment. We've started to reject from it, but still plenty of time to prove itself on this move. But interesting how long this channel's been with having that move there. And again, a rejection from this would suggest a move back down there. That's assuming that altcoins and Bitcoin don't just continue to rally. Okay, Sol's looking nice. Actually broken through that 200 EMA and above it. Yeah, it's still climbing. Expect the pullback. Look at the EMAs there. Look at the vectors. This could fall all the way down. It's actually already cleared 97 high for May. So it's already done that. So it could come down to 90. Hell, it could come all the way down to 83, still being a bullish pattern. So looking good. Monero climbing hard. XRP very hard, but not got through that 200 EMA. 800 EMA, sorry, is above the 200. So again, move it down. But just look at the vectors. Look at the EMAs. Look how vertical they are. That is not healthy. We need that pullback. And Zcash, it made its way to nearly 900. Wild. Bearing in mind, this had that glitch. We have no idea of how many of these tokens are out here, and yet it is pumped like it doesn't care. This is the bottom of the glitch. We've nearly 4 times that. We certainly 3x'd it from that position. Kind of wild, really, when you think about it. And I was just... something came to me when we were talking, and I've totally forgotten it. Lost my train of thought, sorry. Some of these other ones, so AMSL, we've had a little bit of pullback across the markets, apart from crypto-related ones. The Circle's doing well. NVIDIA earnings tomorrow. We are expecting another record revenue, so don't be shocked by that. But what be shocked is we always seem to see sell-offs after earnings, so that might well still be the case. But everything else is, it's had that, Tesla's had that pullback, that break, hasn't quite got above that 50 EMA. One to certainly watch there. Coin climbed, but a little bit of a pullback. MicroStrategy we've already discussed. Stretch almost back to peg. Hell, imagine buying at 72, but ordering a hell of a risk. T2's fine. Astrid's had a pretty good day today. Smart web company. I was looking at this. Yeah, I've had a good couple of days, but in the grand scheme of things, still not looking great. I know it's not quite that picture, but that's where it is. I think that's probably it. There was something I wanted to mention about, it wasn't ETH BTC. It was something about others versus BTC, but ultimately, I suppose, is it right to be buying altcoins just yet? I'm not sure we're there on the altcoins personally. The ones I'm interested in, unfortunately, are all the ones that have moved, but we'll have to just wait and see. We need to see others or altcoins doing a little bit better than BTC at the moment, which isn't actually the case as this continues to move down. Altcoins are still proving not as superior as Bitcoin, which not exactly a big surprise there. Anyway, I think that's where we're going to leave things. I have been rattling on for quite a bit. I can't find the button. I think that's it. No, that's not it. There we go. A very interesting time for us right now, because for those that want the 4-year cycle to be a thing, we are, very close to that potentially being negated. And so we're watching for that. For those that want this to be over, we've filled bags, whatever. That's what I was going to say. Sorry, one last thing. Look, even if you have missed the bottom, right? Even if when Bitcoin confirms it's above this, we climb, just bear in mind, okay? This is as low as it got, 57,000, and the bottom is in. That means the next cycle, we're going to see some really impressive movements. At 200,000, 250,000, I don't think is necessarily off the cards, and I don't really like to give price predictions. But if 57 is the bottom, then it means that we're totally exhausted from sellers right now, and the buyers are stepping in, and we should start to see some really big moves from that. So even if you do go, well, I'm going to have to buy in at 90 or 85 or whatever, compared to where that's going to be in 3 years, that's still a great place to be buying back in. That's going to be, similar. Let's get on a cleaner chart. Oops. Yeah, that would be similar to, you missed that, but you managed to get in here, or hell, even here, So there's still plenty of room for that to go. I mean, that was still a 5x at 25,000. 5x from here, 80,000, 400K. I mean, that's the push, but hey, it could definitely happen. So, don't be too disheartened with that. In terms of going back to the point I was trying to make, a lot of things are suggesting that we have found that bottom, and they are kind of irrefutable when you look at the past. But this is trading. This is about just, never writing your beliefs in stone, always being willing to change them, but doing it and managing your risk at the same time. As much as people will say the 4-year cycle's dead, how stupid were we to believe it was a thing? We've only had 4 data sets. Well, the same argument can be made for the fact that we're now trying to justify that the bear market is over with, a couple of prints. We've only had 4 previous data sets. So we just don't know. I mentioned this on Tuesday and on Friday. Now is the time to be spending more time in the crypto charts, understanding what's happening, and not just necessarily waiting for any updates, doing the work yourself. You've had 6 months off. Now's the time to put it back in. You can go and have another 3 years off if you can get this next 4 months right. And that's only going to help you there. As always, I'm around. Any questions, any queries, feel free to tag me, message me, whatever. You got any questions that you don't really want, you're not in a hurry for, then just send them to the agenda chat questionnaire, and we'll tackle them in a bit more detail. I forgot. I'm sorry. I'm going to have to cover it another time. Someone asked me about tax. Totally slipped my mind. I will cover the tax stuff. It's been playing on mine. Apologies for that. Other than that, enjoy the rest of your week. Enjoy the rest of your, I was going to say weekend, but we're not there yet. And I'll speak to you all soon. Cheers now.